Good evening and Merry Christmas. I hesitated doing one of these videos today, but I mean, um, I need to be consistent. It helps me stay on schedule, and the structure helps me. So since not much has changed this week to last week, I'm going to attempt to keep this as short as possible. My name is Daniel Young. I'm the owner and founder of Adapted Perspective and the Adapted Perspective channel here on YouTube, where I help you make your dreams a reality. And of the financial steps and framework that we've created, closed-end funds in our investment strategy into closed-end funds is just one of the ways that we are working towards our financial freedom. So if you want the full version and all the steps, then go to Facebook and check out my page there called Navigating Your Finances, and you get the whole framework. It's the same reminders and disclaimers that this is an unedited video, so who knows what you'll hear in the background as I film these in my house. I am not a financial advisor. I am a financial strategist, and I don't speak like the herd. I walk in limited company, and sometimes I walk alone, and I'm very okay with that. So normally I would go through a pretty significant script and get into our portfolio and describing our portfolio and our strategy. And I've done that consistently the last 6 weeks and said pretty much the same things. So if you really want all that, look at the last video on closed-end funds. And scratching through all of that, because it is pretty much the same thing, to rehash where I would park money. Like if I'm investing tomorrow, where would I park money? Where would I put money for the long term? I would put that into bonds, energy infrastructure, so like oil, utilities, energy transfer, and then almost everything else. But, excuse me, not technology or not outright technology, not NVIDIA, because I still think tech is overpriced, and consumer as a whole. Um, you could make the argument that all parts of the market are consumer based because everything is cyclical to a degree, but consumer in and of itself is too big for me. So, or at least too big of a category for me. So, almost everything else being private equity, business development companies, real estate investment trust, banks, preferred shares, data communications, software management, with as popular as the technology infrastructure is, data management. And so data management and communication management is now like information on the cloud is still technology, but it's very different than just the manufacturer of technology. So honestly, the ongoing like there's a lot more funds on discount this week than there have been, which doesn't make a lot of sense because the market has been doing better. Uh, it's like the eighth straight week in a row the market gained ground. Um, the whole strategy of this, and that's the sifted list. The whole strategy, if you want to actually watch me sift through this and explain it all, watch the last video. But in the interest of keeping this as short as possible, I really am going to try to trim these down. So all of these are significant based upon our parameters. And if you want the parameters, watch the previous video. But now that they're all here, whoa, that's the wrong tab. Now that they're all here, we're going to sort by yield. All right, make sure this is still the same. Is it all of a sudden changed? Our goal is 9% or above. So HQL is close, but it's a dividend reinvestment and it does it for you. And that's not my scene. And this is really tripping me out. Easier. All right, so our strategy has been 9 and above. All of the discounts are significant. Additionally, I don't want to pay anything close to 16. Gabelli is on sale for the first time in forever. Uh, it presents an interesting conundrum, and it I'll leave it on the list for now. So historically, it's premium, and not just a little premium, like a lot premium. Historically, it sells for much more than what it's worth, or much more than what it's worth. Even the 5 year data, it's on premium. So to catch it under, like under break even in discount territory is rare, and it's in discount territory now. The rest of the stuff, despite it either being recommended, which is in purple, or green, which is just otherwise interesting, like it's discounted and it's significant, but it's not better than what we already own. And we own everything in blue. So if you think about the list of where to invest, bonds, energy infrastructure, and almost everything else, that's this list. This is more outright technology. So you get business development, energy infrastructure, uh, real estate, bonds, or sorry, HFROs, more bonds, uh, private company, private lending, uh, private, yeah, uh, common shares, and then HLB is kind of it's not a portfolio in a can. It's not every sector, but it's real estate, bonds, communication, data, energy. It's a great mix of everything. It's been my kind of self recommendation for the last 3 weeks, but we just haven't bought. Um, so, of the list, I always like to know what we currently have. My goal has been to get everything to 200 or more. We don't own any of that. Uh, I like even numbers, so uh, we used to own KYN and KMF, sister companies. They merged. It was not a straight one-to-one transfer. So we ended up with an off number of shares of KYN on the transfers. So I evened out the shares. So I don't plan on buying any more of that. I like this company, but it has a fantastic yield. But of what it pays out quarterly, we can blow that away monthly. So I don't plan on buying any more of that. Um, I like it, but I don't plan on buying any more of that. So if you don't own energy infrastructure, that's a great buy. Um, bonds, preferred shares, and then a mix of all. So the question becomes, is this better than anything we already own? So in means of fairness, I like to buy things in sets of 50. So in fairness, is it better than something we already own? Like it's better than these two individually. Uh, Payout wise, Gabelli is the like you could buy it where it is and sell it for a premium, but it falls in that category of just buy and hold indefinitely. Uh, the caveat is his dividend is consistent. I mean, it always pays consistent. Sometimes there's a hidden yield there, but it's not exactly increasing. Versus that's increasing, those should increase, should. That's been fairly consistent, and that should increase. So, and it's a quarterly deal. So every quarter you get 15 cents for every share versus every quarter you're getting 3 times that amount. So that pays a higher quarterly dividend. That if we're doing this by quarters, that pays a higher quarterly dividend. That pays a higher quarterly dividend. Um, so the bigger difference between these is that that's primarily stocks, and these others aren't investing in blue chip stocks like that. So is it worth it? Um, at our disposal by the end of the month, we should have this. Excuse me. So everything on the list we can buy, but is it worth it? Does it add to our, like, yeah, it would add to our portfolio. It would pay 30 a year. Um, but it's not exactly better than what we already have. And in looking at what we currently have, portfolio in a can, portfolio in a can, technology portfolio in a can, technology portfolio in a can, healthcare portfolio in a can that I want to get rid of. USA is built the same way, but I honestly want to drop the fund because it's that automatic dividend reinvestment where they pay you dividends, but it's the automatic dividend reinvestment where they pay you and then take it back and invest it into the company. So you end up with partial shares, which in turn does decrease your overall share price over time. So whenever you sell it, it's great, but it's not money in hand. So to sell that and then pick up Mario's fund would be interesting. Um, would be interesting. But can I filter the list even more? So that remains on top simply because it's got the greatest discount. Like if all of these are $1, you're getting it for almost 40 cents off. That's like 60 cents a share. That's insane. This is the um, outside of Mario, I would put money here because for whatever reason it dropped end of week, and I would love to equal that out to 200. That stays as a top three category. These are preferred shares that they're not preferred. I'm sorry, they're not preferred. It's convertible shares between stocks and bonds, um, which is good and bad in this market. I mean, you could argue either way, but for ease, it's honestly the same top three. Like it's been the same top three for weeks. I deleted two other tabs today that were the same thing. Only difference is this one. And no, we don't own any. Um, for the same price, I don't like buying things this way, but for the same price, for a comparable price, uh, it's not better, but it's that ongoing long-term hold, which this one would be. And uh, let's say this well, diversity for the sake of diversity is not great, but it would fill a good hole in our portfolio if we ever sold USA, which honestly sounds weird to say. So in the current, hmm, so if I'm buying Monday, or I guess Tuesday, I'm buying tomorrow, I would even out the 200. Uh, because I mean, this dividend paid out quarterly, you're getting this dividend every 3 months compared to that dividend every 3 months. So it doesn't, even though I love what's in his portfolio, Mario Gabelli's name alone will sell his portfolio and hit it in a premium, which is great if you ever sell it. Uh, The consistent dividend is great. It pays an amazing yield right now. And it's hardly ever in discount. Like I can justify the buy, but it doesn't pay better than what we already own. And it does fill a need if we did sell the fund, which I really would like to sell this fund. Um, we should get a dividend at the beginning of January. And if the price is still high and climbing, then we might actually sell the fund. So at that time, if this is still at discount or the discount widens, then it's worth a better look. Um, but if I'm buying tomorrow, I'm buying HGLP. So hopefully, I won't say hopefully. Um, yeah, I mean, gosh, I could justify this, yes, but at the same time, it's not better than what we already have. It's tempting. Like if you watch my videos when I pause and double check and start to wrestle with my own logic, you notice that I am tempted by certain things. Um, gosh, I am tempted. The flip side of this is so you buy it and then the discount closes. It's not like it's paying you a ton of money in the event that it opens back up into discount again. Like if it stays premium, our rule is you don't pay premium. So you're kind of stuck with 50 uh, until it drops. Maybe it climbs premium and you sell it. That's true as well. You could swing it, like buy it now, let it climb $1, sell it, and then swing that money into something else you could. But if I'm playing the long game, if I'm playing the long game on consistent dividends, consistent monthly dividends, even if even to buy this, this gives me a better dividend than that, and it's consistent. And it honestly, after the merger, it was supposed to go up, which it's not supposed to go up a ton, but it's supposed to go up, and it's still a rising dividend. It has not regained what it was prior to COVID, prior to global lockdown. If it goes back up to what it was, then it pays an insane dividend. So a consistent dividend versus two rising dividends and one really long consistent dividend that still pays more than what that is kind of trumps any justification to buy that, even though it's Mario Gabelli's fund. If the discount widens, maybe it changes. But for now, that's the best deal. It's the best deal for us. If you're new to this and don't own a closed-end fund, any of these three are great ideas. But if you're going for consistent monthly income, it's the top two. If you want to invest in oil, it's here. And if you want blue chip stocks, and uh, if you want blue chip stocks, and you'll go with the overall rise and fall of everybody, that's that. Um, yeah. Otherwise, I'll just start going in circles again. So I'll just call it there. Uh, those are my top selections. So if I'm buying tomorrow, it's HGLB. If you're buying tomorrow, then you got to make your own decisions. That's the whole point of this, to teach you how to manage your money, to teach you how to invest in the stock market and to do it on your own. Do your research, know what you're doing, trust your judgment, and learn and enjoy the journey. And if the first time it doesn't go well, that's okay. Just pick it back up and try again. The Every time we buy something, there's this like inbuilt hesitation of we're going to buy something again. Even though I've done all the research and have all the stuff, it's very different to actually push the buttons and type the numbers, or push the buttons and type the numbers in and click the mouse and say yes. So my whole point is you can do this. It's much easier to trust somebody to do this, but you generally pay a fee for that. So you can do this. You can manage your own portfolio. It's challenging, but it's very worth. I think it's very worth the experiment and very worth the experience. And on my end, I'm doing all this research for me, and on your end, you're using all of my research for you. I don't want your money in the sense that I'm not going to invest your money for you. That's your job. I'm just here to help, hopefully teach you, uh, hopefully help you understand the market, and hopefully help you to learn about closed-end funds and use closed-end funds for your retirement because they pay a lot better than anything else in the market. So whatever you have this week, I hope it goes well. Uh, we're looking forward to New Year's. Christmas has been amazing, really just to have time with my family. And I hope you have time with yours. So enjoy the rest of today. Enjoy the week ahead. New Year's is right around the corner. And if you have no idea how next year is going to go financially, then come check me out on Facebook and see the system we have. And regardless of whether you need independent one-on-one help about all this other stuff, if you need help and want to talk about how to do a budget better, then let's chat and let's get you going. So I will leave it there. So I wish you a very Merry Christmas and a Happy New Year. And yeah, I will keep trucking on videos and you keep working on you. Just captain your ship and wherever you are going, right? Know where you're going, know why you're going there, and captain your ship, and your ship will go wherever you steer it. So captain your ship, take some ownership, lead your crew, right? Enjoy the adventure. And as you go, make it happen. So Daniel Young signing out. I will see y'all on another video. Bye-bye.